What's going on YouTube? It's your average traders back again to do a portfolio update. It's been a bit of a while since our last pod. Been pretty active on the portfolio front, a lot of volatility, a lot going on. And so I thought I'd just take this video to just comment on some of the positions that I have been entering and exiting and just see where the portfolio stands in general. And overall, the market has been volatile. It's been a day trader's dream. The long-term investors, just have to try to sit through this. There's a lot of headwinds. We had inflation, which has been well telegraphed. We have this Russia-Ukraine tensions, and the problem is just there's so much contradictory comments. We had the big rally yesterday as there was reports that the Russians were pulling troops out. Now we're seeing today that the US has not seen evidence, or Europe has not seen evidence, so the tensions come back on again. We had oil price dip yesterday, then come back, and now it's gone down a little bit again. And so it's really hard because it's literally the market is it's at that moment where the market is reacting pretty much on every headline, whether we go down 100 handles, up 100 handles in the NASDAQ. And then afterwards, we've got all this Fed commentary as well. Now, we've seen real hot PPI data at the US that followed on from the hot CPI data. And so, the thing is that, I thought it was a full-on bet that we're looking at 50 basis points in March, but we've seen some of the Fed guys come out today. Kashkari did come out and say that he's urging the other Fed members to go a bit more slower, that raising too fast, too quickly could derail the economic growth and could lead to a recession, and sort of urging for a 25 basis points, 100%, no matter what. We're seeing all of this seven rate hikes for the year. So personally, I think we've gone a bit ahead of ourselves, and realistically, we might see about 4 or 5, maybe about 1%, 1.25% by the end of the year. So it will be, we've just got to see how it all sort of plays out. But if one thing that could provide some near-term relief is if this Russia thing, Ukraine thing, I don't think it's ever going to be fully sold, but at least short-term sold, which can sort of lower the price of some of the commodities and energy and some of the metals. We've seen rises everywhere. Gold's been a great play. I had gold, and I've actually exited one of those positions. So gold has been holding up pretty well, and I think it could probably have this breakout that we're looking at. So anyway, without further ado, let's just look at the portfolio so I can quickly talk over it. And so here, since the last time we traded, had to take quite a few hits, few profits. Currently, the realized P&L up about $196 on a 10K portfolio. So it's not the best, but to be honest, the fact that it's positive so far, given the type of downturns and some of the huge moves that we've been having, it's not the worst, So since the last one, I had to take the full hit on SE from a high of almost 380, went to 190, which was the 50% retrace, and then it went as low as 118. And that was a tough one, and there was no way to save this iron condor. I had the 190, 195, so I had to take the full hit on that on expiry, took a $275 loss on that. And had to also take a hit on my oil play as oil kept on going up, 56.5, 58 call that I had. But my risk was limited to $80 that I took in 70 credits. So I took the $80 loss there. Robinhood as well, that dog shit stock, that was always going to be a loser. I still can't buy an uptick. But the one thing is, Robinhood has leveled around this $13 mark. So the question is, might be worth a play if IV is still high. I might look to try to, maybe sell some 11 puts or try to do some type of credit spread in Robinhood. So that one is looking all right. That could be interesting. Matterport, that is a trade that I entered on back on June the 20th. That looks like it's going to be a loser. It was $195 option, 10-15 call. I mean, Matterport was the Metaverse play. It traded as high as 31. And when it was getting around 16, 15, I thought, let me sort of nibble on it in my equity portfolio. And then it went to 10, 9, 8, and today it reported earnings. And those earnings weren't good. I mean, the headline this year was good, but next year they guided woe light of consensus, and the shares were down almost 20% at one point. I think right now we're down about 12%. So Matterport, to be honest, I might just try to get out and salvage whatever credit I can. Be lucky if I can get $20, $30 out of it. March 18th is expiry, so there is still a month in it. So I could try to play it out, but realistically, Matterport in the after hours trading in the mid 60s, so it would need a 50% rise to get back to my long strike. So I mean, it doesn't look good. But if I can get like 30, 40, $50 out of it, closing it out, I'll take that in a heartbeat and just limit the loss to about 130, 140 on that one. So that's what I plan to do on Matterport. I did take a few profits. Mara was a nice one. Took in 80 and then got out with an $18 debit, just taking the profit early. We've had the nice bounce in the crypto, which helped Mara come back. Square was a decent trade, small profit on that. SoFi, another trade similar to my previous one, took profit on that. And on my GDX, which is the gold miners ETF, done a 29.5, 30.5 put, taking in $40 credit, done 3 contracts, took a $90 profit on a max $120 risk, $180 risk. So that was a decent one. So there's a few other plays. SE, I re-entered that on the recent down move on the 115, 120 put that was. And it's had a good bounce since then, so that's pretty nice in the money. Roblox, alongside Matterport, there were, and Meta, Facebook, 3 Metaverse plays that have been absolutely annihilated. We had, let's just look at this. So Roblox, I have it over here. Roblox, we actually reached a low of around 53, then rallied all the way back up to 73, and then here's the drop today, 53.73. So we're pretty much trading at the low that we saw in January and below the IPO low as well. The opening on the IPO was in the 60s, but I think it did IPO in the 25s or something like that. So the thing is that I thought the 50-45 bull put spread, I mean, if it goes below 50, then, I think Roblox is good for 50, but I mean, the downward pressure is huge. And we've seen Facebook as well, had that huge down move, 25%, massive. That, funnily enough, that Facebook move was over $200 billion decline in market value. And that was followed by Amazon, which saw a 200 billion gain. So we see back to back most biggest market decline in terms of market cap and market cap gain on the Amazon. So with Roblox, we traded around 53. So that's why I put on that trade. I actually put it on earlier this morning. But I did a longer expiry, May 20th, to hopefully it can sort of saucer out 45.50, took an 185 credit for 315 risk. So that, and I entered into an AMC Iron Condor as well. We saw a bit of a move on AMC. We briefly hit above 20 today. So I thought with AMC, you can always get good premiums for some reason. So I thought, let me do the 15.17 put, 29.31 call for a $90 credit, $110 risk. So I thought the risk reward ratio was pretty decent on that. So I did that trade. Affirm, that was another one, another beating. We've seen a lot of these stocks. I mean, PayPal, it's got smashed. Facebook got smashed. Affirm got smashed. Roblox, SE. These are all just smash names. And so if we look at, let's just take a look at Affirm. I mean, Affirm, I think, is near the IPO price. And again, to be honest, I think the growth is there. They're getting so many new merchants. The numbers on the top line were good. It's just that the losses were huge, and they're well beyond consensus. So that was the issue with Affirm. But I think with the amount of retailers they've got in, I mean, I think it's good value around here. Well, here we go. So we were trading, let's sort of go all the way back. Oh, so we IPO'd way up here in the 90s, went down. We did in mid-2021 get to a low of around 48. So we've actually taken out the all-time lows in Affirm. But look at that move and then all the way back down again. So again, I'm just looking for it to hold station here. I think with the numbers they reported and the amount of merchants they've gone on and the new sort of shift towards this type of payment, I think during next year, you could see it at least stabilize around here. Well, I hope so anyway, for the time being. But it's really been dragging. I mean, we cannot buy an uptick since their earnings. We've had 1, 2, 3, 4, 5 red candles in a row since their earnings. So that's a pretty tough one right now. But I got in it because I'm the contrarian. You see a huge move like that comes around the level, trying to protect that 40-35 put. For that one, I actually took in what did I do on that one? Oh yeah, I took in a $160 credit for a $340 risk with an expiration of April 1st. So I'm hoping, given we've got about a month and a half on that trade, hopefully we can see a bit of a bounce. And then hopefully if we've got a decent enough bounce and the premium sort of come in a bit, I'll be out of that. And so these are some of the ones that I've got about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 open trades right now. Closed out quite a few, and just right now, just above the unchanged mark with 196 realized profit, and unrealized is obviously a bit negative, but we'll see if they start playing out. But let's just look at the S&P. Thought I would take a look at this to see if it can give us any clues of where we're going. Now, obviously, there's a lot of fundamentals in play here. The market is very, very choppy. Again, the question is it 25? Is it 50 basis points? The way Kashkari was talking, I think he might able to, although I was initially convinced that we might have a 50 basis point rate hike, I think Kashkari and I think some of the more dovish Fed members, they would try to champion a 25 basis point hike and try to play it a bit easier rather than going full in with the 50. But again, it depends on the data. We're about, I don't know, when's the next rate meeting? Some mid-March, I'm presuming. It will be, we've got to see what the data comes in like there, and obviously see what energy prices are doing, seeing what the supply chain is doing. And so I think a lot of it is still data dependent to see what actually happens. But if we look at the S&P, since April last year, really, we've been bouncing along this channel. It has been a nice channel over here, and then we sort of broke this upper trend line, lower trend line initially, and we found support at this resistance level here, which did turn to support back in October. Then we saw the big move up. We started into a new sort of trend over here, bounced up till we got here, and then this trend line did not hold, and then we fell to the lows actually in October. So we sort of briefly breached that, but we saw this pin bar candle, which really, that was the move where we were down 1,000 points in the Dow, and we pretty much rallied the whole thing back. And then we made our way back, but you can see these huge wicks that have tested this support at just below 4,300, and it's held really strong. We've got 1, 2, 3, 4 large wicks that have seen plenty of support around this level. So this is a really important level to look out for. And since then, we've risen about 5%, or about 250 points in the S&P. We double topped right here. Where's that level? Just under 4,600, just a double top there. And now we are mid-range in this channel. So, I mean, this is the thing. We've seen a bounce back up here. We've seen a little, inside day over here. So it's possible we could reach back to this level. And considering that we had 4 wicks here, I wouldn't be surprised if this time we just took it out and start heading back towards the 4,000 level. But if we don't, we want to test this triple top here, just below the 4,600. I don't see the catalyst that's going to really take us up there, but you never know. I mean, the earnings this season has been very, very mixed. I mean, you've had some good earnings, but some very bad ones as well. And we've had some real massive price action, regardless of the market cap of the company. So, I mean, I'm not ruling out anything going forward right now, especially with Russia. And, we don't know how stable Putin is, if he just has a macho man moment and just decides to invade. But, the economic consequences would be dire should he invade. But it will all be interesting. Inflation, war, oil prices. There's a lot on the radar. But so I'll just call it at that. Just giving the update on what I'm doing. I guess I'm looking. I'll be interesting to go back into gold again. If we dip back towards that 1,800 level again in gold, I might initiate another long position. And I'm looking out for Square as well. Square, I got out that position. I was a bit hesitant ahead of their earnings. I mean, Square is that one of those type of companies that could drop 20% or could gain 20% on their earnings. So we'll see what actually happens on that. But until next time, please like and subscribe if you enjoyed the content, and we'll catch you on the next one.